FTSE 100 shares. A good starting point for anyone wanting to profit from spread betting is a list of FTSE 100 shares. The FTSE 100 is made up of the 100 biggest blue chip companies in the UK market. The term blue chip comes from the stakes in poker. It refers to shares which are often issued by big companies and household names. These companies are usually valued at a minimum of £5 billion. FTSE 100 shares represent about 80% in value of the stock market. They often form the basis of pension funds and insurance company portfolios. They are often, but not necessarily, in the FTSE 100 list. Because they are the largest companies in the UK, they are also heavily involved in the world markets, which means that international happenings have an impact on their share prices. Another factor to be noted in your research. They are less volatile than smaller companies, but this is a positive factor when you are learning to trade, as you stand less chance of being caught out by large swings in prices. The chief advantage of trading FTSE 100 shares is that it's easier to track the performance and prospects of blue chip shares because there is a lot written about them in the press. The disadvantage is that changes in the share price are gradual. The secret of making a great deal of money by betting on blue chip shares is to spot or anticipate something coming up which could unexpectedly rise or lower the share price. Now let's look at what you're going to trade. Different assets trade differently and require different skills. I would suggest that you start with slow-paced UK FTSE 100 stocks, preferably expensive blue chip stocks that are very liquid. It also makes sense to choose shares with less volatility, such as insurance companies and banks, as opposed to miners. If you can't make money spread betting on the FTSE 100 shares, it is not going to be any easier with small caps, which usually come with wider bid-offer spreads. Indices are too random for beginners to guess. Most US stocks are too volatile and will wipe you out in no time. And also, Forex is also too volatile for beginners. Likewise, commodities like oil are just too volatile to be trading, at least until you learn the ropes.